Good morning, fellow traders. Disclaimer, this is our view on the market and it's for education purpose only. We encourage viewers to do their own discretion, due diligence before acting on this, as this is not by any way providing financial education. It is just the way we see the market and it's for educational purpose only. We will not be liable for, we wouldn't be liable for your losses, okay? So make sure you do your due diligence. Thank you. So let's head on. Today we are going to look at basically the same type of markets, since nobody has access to look at any other thing for them. So we'll be touching on pound USD, Bitcoin, the Nasdaq, which is the strongest of the indices at the moment. Then, of course, gold. There has been a major development. Iran and US and Israel, they have attacked Iran. Okay, by a lot of massive explosion have been heard in Tehran and other places, and Iran has also responded by firing missiles towards Israel and American bases in the Middle East. So probably the market is going to be volatile. We don't know how long it's going to take. So before even we touch on anything, we ask all of you to be very, very careful, okay, before trading, as all the US pairs are going to be affected, and probably the market in general. Okay, so just be very careful when trading. All right, having said that, let's start. So this is the pound USD, one of the major currencies traded worldwide and also known as cable. Okay, and then this is, we are looking at the 4-hour chart. So let's start by going to the daily chart and see what we can see before we come to the 4-hour. So if we look at the daily chart, remember last time I talked about when we had, okay, this is, you have a break of structure here. We have a break of structure here. And this is the first wave of an impulse, okay? So you expect a correction to come down. And remember, if you guys had remembered, I told you we spoke about this fair value gap area, okay? We had this fair value gap here. So normally I like to bring it because this is also an order block area. So I would like to draw it to from the first week and the last week to encompass this order block area. I like to include them in my fair value gap, and we talk about this as well. Okay, 1, 2, 3. So you can see now that we have all the fair value gap has been filled now. So we expect the second wave of the upward trend to go. So if you go into this trade, I will expect your stop loss to be either the low of this, but what I would like you to do is when the market open, wait, as there might be a possibility that price can wick to this fair value gap. I say fair value gap. This is a liquidity as well pool, so there's a possibility market can wick back to this area before you look for an entry. Then you look for a target. Your final target could be here, this high, okay? But the first, and once you have an entry here, I'm expecting the first target to be somewhere here. Why? Because if you look right up here, see there is a sell fair value gap here, okay? Yeah, there is a sell fair value gap on this area, you can see. So once price comes there, you expect a reaction, okay, before price will generate liquidity and push it up all over the way. So you can see that's a fair value gap over here. This is the wick and this is the wick. So when you stretch it, you have that sell fair value gap, okay? So let's see if we match in the 4-hour and see. Okay, this is the 4 hour, and you can see the same thing here. This is one candle here. This is the second candle here. So you have a 4 hour fair value gap here. If you even extend it to this side, okay, look at the 4 hour fair value gap. This is one, and this is two here. Okay, here. If you extend it right down here, you can see it's corresponding to this fair value gap also here. Okay, so once price comes there, I'm expecting a reaction, and you can see a lot of liquidities equal lows here. Also, so that's liquidity. Okay, so you expect the liquidity to be swept before you look for a buy. So if you want to take the sell and you want to take the buy, it's up to you. But I will personally wait for this liquidity to be taken and make sure that my confirmation is solid on the pound yen before I look out for the buy. So you can see the same structure here. Okay, structure broken here. Okay, but then we have that fair value gap also here. This is the 1 hour fair value gap. Look at it. You have one just position along this area for that 1 hour fair value gap over there. Okay, then yeah, so and you have another one here. Even if you look at the 1 hour, you can see there is a fair value gap here on the 1 hour. So price is right in the first fair value gap. So that could act as a catalyst for maybe price to come down, take out all this liquidity generates before we look for an expansion. But always you can expect this to happen. Okay, whenever there is an expansion here, this is the first wave. You expect the correction to come before the second wave. Okay, so bear in mind, it's not only this market, it's on to all the markets. So once price tap into our point of interest, okay, you can reach to your entry time frame and look for it. And if you want to, so you can add you can pick the Fibonacci tool, put it on the high here, bring it on the low here, and it will show you the discounted zone where you actually want to buy and the premium zone here where you sell. So you might see that the premium on the when you are selling, when the market drops like this and you are looking for a continuous down, then you look for that premium where the sell is possibly supposed to happen. In most cases, you might see it might correspond to a fair value gap. Okay, so if you look at the daily also, do you see there is another fair value gap here? Do you see? So that is where I was saying that's to be your second TP. Okay, second TP. Okay, then eventually you expect the price to deliver and also pick out those liquidity sweep it before you expect to go up. Okay, so price could come down here, take the liquidity, come up back here, either react from any of these zones before, or ultimately I expect that by the end of the week, if we get a very strong dollar, we go. But due to the war, if the dollar becomes weak and we close below this area, then this will be the next area that you have to look for that price go actually retest. Okay, so that's all we have on the pound USD or cable. Okay, so we are on gold here. Okay, previously I spoke about this level, okay, where price came and hit or this area where we look for the buy, which was a very good point of interest on the daily chart. And last week we didn't, because of technical issues, we couldn't come in, but then I spoke about price coming to 507. Where is 507? This is 5,000. Yeah, so 507 is somewhere here. Okay, that we talk about the price is going to react there because gold is still bullish. We did not have any indication that gold is going to be bearish, and we expect price to keep moving up when the market open. Okay, so how are you going to play it? So this is the 4-hour chart here. I would like to see something on the 1-hour chart. Says the 4-hour chart. I'm not seeing anything in the 1 hour. I'm not even seeing. Let me go to the 30 minutes and see. Okay, so then let's come to the daily because these candles are too small for us to see anything to make a decision. Okay, but what we could see is that we didn't have any wick here to give us a fair value gap. Okay, so the possibility that we are coming to is a 5,000 and 350 or 5,400 or even possibly 5,500. So this is the area I will be looking, okay, for a reaction when the market open. The 5,000, 395,400 area there. That's where I'll be looking. But how do I get an entry? That was what I was trying to do. But it seems the candles here. Okay, let's see. If we actually do not have any wick on even the 4-hour chart. Okay, so how I'm going to approach this market is that since if you look here, okay, we have a break of structure here. Okay, we have that break of structure here. I will expect maybe I will love price to maybe come back into 5,250, 5,260 because that's a very strong entry for a continuation. But since we have war, I wouldn't be surprised when the market open, price will just wick down, get shoot up and try to go up. So just be careful on how you enter good. As you see, my 4-hour chart is not as clear as the pound USD, and the 1 hour also is not as clear as we have a very, very small candle. So the only decision we can make based on this is on the daily charts, or let me see what the weekly. Yeah, so the weekly candle is also basically is saying the same. We don't have any. So I'm just looking for a continuation. So the way I would like you to approach the market is have patience and let the market give you a continuation buy for you to enter. Because at the moment, as you can see, we don't actually the daily chart doesn't give us any other than telling us that it's bullish. And how do I know that it's bullish? Because Friday closed above, it closes above Thursday high. Okay? Closes above Thursday high, and it has even closed above Wednesday and Tuesday high. So that is signaling a strong bullish that this market is going to continue to go up. So if you want to trade gold next week, all you have to do is be patient and wait for very good entry confirmation. And probably you can wait for the low of the week by switching your chart to the weekly chart or the daily chart. Wait for a low to form, wait for liquidity sweep, wait for confirmation, then enter your trade. At least you can catch 100 or 200 or 300 pips for next week. Okay, so let's move on to Bitcoin. Yeah, and Bitcoin, we didn't do anything last week, but it's just doing exactly what previously I said. Remember, we had this low here, and I said when we were talking, Bitcoin was here. So we were expecting Bitcoin to move to the 70,000 level, which it did. Unfortunately, we couldn't go any higher because when we spoke, we had this fair value gap here. Okay, we have one here. Okay, 88. Then we have another one here. Okay, then we have another one here. Okay, we have another one here. Okay, we have another one here, which is around 77. So what I said previously was that I will expect Bitcoin to probably, I would love Bitcoin to come back and either take out the 59 and form a new low before I will start buying. As you can see, this is, we are on the daily candle and we had a fair value gap, okay, or sell fair value gap here, which at the moment it has been filled, okay. Price has been filled, okay. So this is the low of the order block, okay. So that's why I normally draw my when I'm drawing the fair value gap, I like it to include the order block, because most times after it has filled the gap, it comes back and retests the order block. Okay, the low of the order block, which you see today, we nearly touch that low. So if price comes and tap in this low here and it breaks below, then I'll expect it to come and take this low. Other than that, we will expect price to have a reaction and start moving up to the first fair value gap here, which is 78. And probably we come here. Eventually, we could come to 90,000, okay, where we have some sellers waiting there before price probably will react and come down again. Then probably the real uptrend will start to go up. So let's see what we can get on the 4-hour chart. Okay, yeah, you can see exactly it's the same thing coming here. Okay, and this area is serving as a liquidity area, so possibility that price will come and take it is high. But if you want to be a buyer for Bitcoin and hold it for the long term to break a new high, I would say just wait for the low, and when you get that short-term buy, you can buy. Depending on your size of account, if you have a big account and you buy and you don't want to take your profit here, you want to actually take a sell and get out of the sell, then start building the buy position. That is also good. But if you have a small account and you just trade, then you can wait for the buy here and take your entry and then go. Let's see what the 1-hour chart is saying. Okay, as you can see, we have that 1-hour fair value gap here, and you have this big inducement 1-hour candle. It formed equal lows here, which will serve as a liquidity point. So it will be interesting for price to come and take that liquidity point before, if we close back up, then you can maybe put your stops below that and look for the buy and come to the 69, and probably this liquidity area to be taken, another liquidity point to be taken. Then if we have a strong order flow for buys, price will come all the way here before we start coming down. So actually nothing much, but it's just be careful the way you play it. And don't forget, America and Israel, they have joined forces and they are attacking Iran. So possibility of volatile market next week is going to be high. Okay? This is the Nasdaq. Okay, so normally, if I want to trade indices, we have the Nasdaq, we have the Dow Jones, we have S&P 500, we have the Nikkei, we have the German index 30, and we have the FTSE 100. But in America, if I want to trade any of their indices, I check the S&P 500, the Dow Jones, and the Nasdaq. Then I will look for the strongest one to buy. Sometimes you can see all of them, most of the time, follow the same pattern. If one is going up, all of them is going up. But we have one which is actually stronger than the rest of them. And that is how I like to trade. Okay. So last week, we didn't actually come here. So let's look at the last week candle. So this is what actually happened. Last week high, 25. I think previously we spoke about this high. Okay. And then this is the last week low. We talk about these lows and the high. So based on this weekly, let's come to the daily and see. So this is what we did last week. Okay. The whole activity here is what we did last week. 1, 2, 3, 4, 5, 6, 7. Okay, 7 candles because this is daily. Each candle represents 1 day. So what is this telling us? If we look at this daily candle, actually, apart from this here being liquidity, okay, and this was a sell, also some sellers here. Okay, so you can see when market got there, we have that reaction here. So this is the first impulse here. So we expect probably maybe price to come here. Then we'll have a second impulse for a downtrend. But how do we enter? Because the daily is not telling us anything concrete set up on the daily. So if you want to trade this, it means you have to come to the 4 hour or 1 hour or 30 minutes before you can trade. So let's look at it here straight away. When we come to the 4 hour, you can see we have this sell fair value gap here. Okay, beautiful. Okay, price has tapped in, but remember, we haven't filled the hole. So what you expect from me is that I would like price to fill this sell side or to this zone here. Okay, I would like price to fill the area to this zone here before I will look for a sell signal for price to continues to come down. Okay, then probably buying TP is going to be this liquidity area. Okay, but if price doesn't come here straight away and price also comes down first, that's when the market open. And let's say price do something like this and come down this liquidity area, take out all these lows. Then let me see on the daily, where are we going? So this is the low and there is another low here. Okay, so if price comes on the 4 hour, like I was showing you, it doesn't go up before it comes down and it takes out this low here. I can look for a buy, a short-term buy here, or if price comes and take this low here, then I'll look for a buy there to the 4 hour, into the 4 hour sell zone. Okay, and where's the sell zone here? Over here. So he said 2 possibilities. Either the market open, we expect price to come up here, then give us a confirmation sell, then we sell the market and bring it down to this liquidity area, which is our target. But price could possibly move lower to any of these targets. Okay, then from there, I will for a buy, a reverse buy to come. Remember, this is very, very volatile. So you can see if you come even to the 1 hour, okay, look at the 1 hour fair value gap. It's sitting here nicely. Okay, aligning with our 4 hour. So a very, very beautiful chart. So let's see what the market will do when the market open on Sunday night. And as always, we wish you to trade carefully, take good care of your health, take good care of your mindset, your mental health, do exercise, eat healthy, and then we wish you a happy trading weekend. We will see you next week, maybe very soon. We will bring you midweek updates and we will be posting some educational content. Everything we are doing here is free. So the least we expect from you is be engaging when you watch the channel, like the channel, comment on the channel,